Alright guys, welcome back. So today we're looking at the MicroStrategy, but market is closed. Happy Thanksgiving you all. Crypto market is trading BTC 95, that's where it's hovering. Weekly performance, yeah, we did have a little bit of a pullback, which was pretty impressive recovery for the BTC yesterday. And you can see 10% or so, actually almost 10%. And we did bounce very nicely yesterday. Pretty impressive bounce. And so far, right here, right now, 96 something, 95, 200. That's where we're trading. MSTR. So there are a few things a lot of people are not understanding. Nobody's saying that the stock is going to come crushing down to, like, I don't know, wherever 100%, 90%, 80%, 70%. A lot of people, smart money actually, is betting, what they're betting on is volatility. They're taking advantage of the volatility. So if you guys remember, in the beginning of the year, we did have identical situation where BTC rallies and so does MicroStrategy, right? And if you take a look at MicroStrategy, what it has done in the beginning of the year, I mean, it did break out of this $70 and went ahead and run all the way to 192 in a very short period of time. And you can see this was first wave. We did pullback, very like 30 something percent pullback, and then goes, takes out that high, and then comes back down. But if you pay attention what happens during that time with the volume, you can see, I mean, of course, it was trading with elevated volume for about a few weeks, and then as soon as volume disappeared, stock started chopping around and pulling back, and it did spend moving sideways for another 6-7 months before taking out that high right here and then slowly running again. This was pretty too far. And volume, you can see elevated volume again. That's when implied volatility goes crazy, and a lot of, in a simple terms, a lot of people just come in and they're gonna like, okay, there's going to be cat 6, cat 7 hurricane, and market makers are like, historically we don't think so, and we will gladly sell you those premiums, which is insurance. That's what they're doing. If you think so, okay, we'll sell it to you. Here you go. And they will dump you premium both ways, up or down. Whether you want to buy calls, they will gladly sell it to you. If you want to buy puts, they will gladly sell it to you. That's how smart money taking advantage of this move. And of course, it has chilled a little bit because volume, you can see, last like 3 sessions after this huge crazy moves, it did chill a little bit, okay? And IV slightly chilled as well, and it's not implying crazy move into December. A couple days ago, if you have watched my video, December 20th, it was implying almost $233 move, and now all of a sudden implied volatility has come down and the stock is only implying $149. So can it go up this much? Can we take out this 543 that we have highest print for this stock? Can this stock slowly grind higher? Yes, but your options may not appreciate as fast as it did when it had this sort of a move. With the elevated volume, crazy attention, everybody was covering it, literally. You're not going to have that move appreciation in terms of your premiums if you're somebody who purely trades calls or puts, just like me. I do that. I am a naked buyer of a call and put every time I want to trade. I don't do spreads. It's been a while. I don't sell premiums either. But this is a premium seller's market, and that's what it has been doing for quite some time. So that's that. And now let's take a look at the short theory. I can debunk that pretty easily as well here by looking at the daily short volume. Again, this may not be 100% of the volume. Let's say on Friday, how much it traded. On Wednesday, it traded 34 million volume, and that's the only thing. The reported volume here for the short volume, 19 million. So it's not accurate because not all exchanges reported, but it gives me an idea of like what was going on for the last at least 5 trading sessions or so, 6 trading sessions, or I can look as far as back month or so. But my point is, if you take a look at this daily total from the total reported volume, what's the percentage of the short? I mean, this is it. These are mostly day traders who go in and out. 33% of the volume was short, 39, 47, pretty elevated, okay. 32%, 42, 39, and that's not high, okay. That's not high at all. I can give you an example of Tesla just to compare you guys, which has a lot more. So this is for those people who think that this is being attacked by shorts. Look at Tesla. Daily total volume, 57%, 58%, 58%, 60, 58. That's their total reported short volume every single day, okay? That's what you can call elevated shorts. But in MicroStrategy's case, no. Like smart money playing it different, and that's how they're playing. They're selling you premium each side, saying that, yo, this is going to chill. This is going to calm down, and this is not going to move as extreme as everybody thinks. And that's what exactly can happen and will happen as volume drops. The range will slow down, and nobody's saying that the stock is going to come crashing down to 200, 100, or $50 or $10. No, it's basically everybody's playing it just like with GameStop. If you remember GameStop, they will sell heck out of very far outside of the money calls, and they will sell you very far outside of the money puts, and that's how they will capitalize. And they don't care about the price action as long as it just volume cools off and volatility cools off and implied volatility slowly decays. That's how they collect their money week by week, month by month. That's what it is, okay? If you take a look at the put to call ratio, I mean, just for last, when we had it, Wednesday market, of course, this is a short week, 319,000 calls traded, 225,000 puts traded. And if you take a look at the delta that is being traded the most, 0 to 20, 44% of the calls, 0 to 20, 63% of the total volume for the puts. Both are sells. In my opinion, 99%, okay? That's how they're taking advantage of the move. Okay, now let's take a look at the price action. So last time I covered this one, I was expecting the stock to come down to the $320 levels or touch at least this 20-day moving average, which is blue line on my chart. Well, almost got there, but didn't go as far as I thought to see some sort of a bounce. But it came with a pretty big gap thanks to BTC, right? But also ultra short term, if you're a short term trader in terms of the stock, anytime stock below 5-day moving average, I stay away. It's neutral to bearish to me. But as soon as it climbs back up, I don't bet against it. It can go basically back to uptrending mode. So far, 20-day moving average above it, 50-day moving average somewhere here at 260. It's above it. But 5-day price action so far has been to the downside. And if you take a look at ultra short term, let's say if you want to switch to hourly chart or so, yeah, pretty nice reversal. But that 5-day moving average is acting as a resistance so far. If it does get back above, well, you can see the stock push a little bit towards 420, 450 is your resistance from here. So I'm going to be watching 450 as a possible area of, if it wants to melt up, definitely. But if it cracks below 375, it will go down to these levels of 338. That's what we tested yesterday. And then 320. So those are the levels I'm watching for the stock. If you're trading options, got to be careful with this one. It's being played a little bit different. Premium sellers, just like with every other large cap that runs away pretty far. That's how they play it. That's how they milk it. And that's the update for MicroStrategy. Thanks for watching. See you in the next one.